Good afternoon. Welcome to the John Sanchez Show on Newstalk 780 KOH. It's a pleasure to be with you and a pleasure to be with my partner, Mr. Jason Gaunt. Holy moly, as Jason and I were saying, let's tell you, right before the show starts, we were sitting here chatting, and I'll let you repeat it. And then I said, yeah, that makes two of us. So repeat what you just said.
I'll even take it back a second. Leaving here last night, Amazon spending a gazillion dollars more than people thought on CapEx. Futures were down 80 to 90 basis points. I think they're probably worse during the show when you guys were on last night.
Yeah, down over 700, NASDAQ and S&Ps.
Wholeheartedly, we were at support on the S&P. You've seen gold barfing, silver barfing, AI barfing, Bitcoin barfing, you name it. Software has been in a death spiral. I was legitimately concerned I was going to wake up this morning and futures were going to be down, 2%. And I was like, I even told you this morning, I woke up in the middle of the night, and normally I'll check my phone, and I was like, you know what? I'm not going to, because I want to go back to sleep.
I wish I had that discipline. We Jason and I both realized, I didn't realize how frequently you wake up, and I said the same thing. I literally wake up in days like you were just saying, not to interrupt you, literally every 2 hours to check the futures. Because folks, when you're sitting in our seat and you have the responsibility of people's lifetime savings, retirements, etc., it's very difficult to sleep. And Jason and I both know how influential in normal situations that an Amazon bad, again, report was good, but we're going to go into great detail, this CapEx spending just tanked the stock in the after hours. And then, like I said, I had that flashback, Jason, when I was with the boys, and I think we just came back from our first break and we were talking about Amazon, and I went, my God. Dow futures are down over 700. NASDAQ futures are down over 700. I checked them at the end of the show and things had calmed down. Dow futures were down a couple hundred points or something like that. So I don't know if it was just a fat finger issue or what it was, but it did not allow me to sleep much. And I usually still, normal conditions, I still wake up every couple hours to check the futures. But I'm sorry to interrupt you, but yeah, go ahead. So it was funny that you and I both were doing the same thing.
I just assumed that today would be a bloodbath. It just lined up that way. And when I looked this morning, I literally looked I think the S&P futures were up 50 basis points or something. I was like, huh? What?
Yeah.
Completely confounded. And it was technicals, right? We just bounced at the same level that we bounced before. And instead of the market, deciding to puke and trade lower, it was a panic chase higher across everything. You name it, whatever risk asset you want to be. Not to say that it's always healthy when you see these types of bounces, but it was a very strong volume day even too. So I'm more than happy to take your Dow to the 50,000 level and go off happy. I'm happy to be wrong today. Let's put it that way.
Yeah, no kidding. It's a good time to be wrong. That's for sure. But I want to debate you a little bit. And only from just again gut feeling on this thing. So, folks, let me tell you where we finished first. I usually say that till we come back from the first break, but I want you to understand a little bit better where we finished today, and then we'll talk about this. So, man, mark this one down in the calendar book. First time ever we closed above 50,000. 50,115 was our closing level of the Dow. 1,207 point gain today. Yes, you heard me correct. 1,207 point gain, 2.47%. NASDAQ rose 2.18%, up 491 points to close at 23,031. S&P up 134 points, 1.97% to 6,932. And Jason's favorite measure, the Russell 2000. You think those Dow percentage and NASDAQ percentages were good? How about this one? 3.6% gain for the Russell 2000, up 93 points to 2,670. Okay, so now you'll have a little bit of background as to what we're going to talk about here. We're going to get in the theme after we go through today's action for you. We're going to get into one of the driving forces of this week's volatility. And again, this is going to tie into my point why I don't trust what happened today. And that is this massive, massive capital expenditure, CapEx spending I've been telling you about every single day on this show. It doesn't make sense why, again, we can go from major concerns, Monday through Thursday about it. And then today, we're not concerned at all with what these companies are going to spend. So it'll be an interesting discussion. But let's go back to, I want to, have this discussion with you a little bit, bro. And that is, how can you How can you have a bounce to this significant amount? Now, I'll give it one catalyst today. And we know, you and I both know, that this market, a lot of times, not always, but follows what crypto is doing, specifically Bitcoin. Bitcoin yesterday during the show, when those futures were down on the equity side, I think Bitcoin, was down like 63,000 range, right around there, maybe even broke a little bit below that. It was down huge. It did rebound significantly. Like right now, I'm watching it. It's up $7,663, 12.06% increase to 71,085. So, you're talking obviously a significant increase from yesterday. But I just it was broad based today. I mean, you look at the Dow 30 as an example, Jason. You had two stocks down. You had Verizon down a whopping 88 cents, and Amazon finished the day down $12.85, much better than, I think, worst levels down around $20 or so. So that means you had 28 stocks positive. This was a buy everything. Anything that's traded on the stock exchange, it seems like they bought it today. And that's why I'm thinking, could it be a technical bounce to your point? Or were these literally, and I hate saying this, a day where the algorithms just went haywire, but for a good sense, right? It just, something felt very bizarre today.
Yeah, I mean, until proven wrong, buying the dip has been the right move, right? I mean, you had software, which would be probably 3 trades happened this week. Silver imploding that we've talked about ad nauseum, right? Parabolic moves tend to always end this way. And we warn people not to get too big because it happens quickly. Crypto, right? The unwind there, I think the two of them are very much related. There's leverage involved across both of those. They're, depending on who you talk to, you saw people who had been selling Bitcoin, et cetera, to buy gold and silver. And then remember, typically these moves are because of leverage, right? People are using leverage. They're borrowing.
We touched
they're
on that
being
yesterday.
stupid, trading futures, trading the, literally I'm like, oh, there is a double X long silver and like all these ETFs that feed on themselves, right? And then as you get closer to the close, they have to unwind and press these things more. And so you had you had gold, silver, you had Bitcoin being weak and it just feeding as it goes lower, creating more sell stops. And typically when people have sell stops, it's because they've lent out or have leverage on these assets. And then finally, you had the narrative of AI eating everything software. Like if you've got an AI machine that can go in your favorite large language model and you can tell it to go write this or do that and then create this output.
Talking about agentics.
Right. Why do I need this software system to do it? Right. I just can go, tell it and prompt it and it'll give me an output. Right. And that was the 3 main theses this week. And all of them created a lot of down pressure on the market. But we were still flat on the year. I mean, it felt like we were down 15% if if you were a high beta tech portfolio. But most of diversified portfolios were still in the green. I mean, all of our stuff, but it's just, it felt really nasty. But we got down to a really interesting support level. I forget what the standard deviation of the sell-off in software was, but it was like the most oversold it's ever been. And it just creates these panic buys when they rip them back the other way. So yes, algos can start it, but then just the catch-up trade tends to feed it, throughout the whole session. But it was a good volume day. There weren't many things that they didn't participate until proven otherwise. The trend's still intact, and the highs are what you're staring at, and not the lows.
Yeah. I want to get into a little bit. We got so many things to talk about. I want to get into a little bit to the agentic situation that you're talking about, because that was an interesting theme this week where, we'll go into some details about this in regards to why it pressured the software names and frankly, some of the AI names. You had a number of pressure points on the AI names this week, right? You had that situation, as we'll discuss. And then another area we're going to get into great detail about, again, this CapEx spending. Can these companies, we're going to share some stats with you that are going to blow you away. If Jason says, all right, I'm going to invest, say he's a CFO, and he says, I'm going to invest $100 into whatever CapEx spending he wants to spend it in, but my free cash flow is only $50 for that year, where he said he's going to spend the 100. It doesn't take an accountant or a CPA to figure out, I'm going to spend 100, but my free cash flow is only 50. So I really can't afford that. So what's your option? you go borrow money, and you borrow more money, and you borrow more money. And in that simplistic example, folks, that is what we are looking at right now. I'll give you just a little teaser of what we're going to discuss. The four biggest AI companies, as we like to call them, right? So this is your Alphabet, Microsoft, Meta, and Amazon. Those are your four biggest. They are expected to spend $700 billion combined this year in CapEx spending to fuel their AI build-outs. So $700 billion. But you now have a bunch of analysts that are, sharpening their pencils and saying, wait a minute here. They're going to spend $700 billion, but combined, they generate $200 billion in free cash flow. So pretty simple math. That means there's $500 billion that they've committed to invest, but they don't have the free cash flow to do that.
So I had an email today, and they asked the question about OpenAI and the IPO and so on and so forth. And I did some fun math, and I was just playing around in Copilot. I said, so OpenAI expected to have $25 to $30 billion of revenue this year, the whole year, $30 billion. No earnings.
Which is not much.
Right.
$30
billion to it. Against $1.5 trillion of promised spending over the next decade. So we'll start there. I said, what if every person in the developed world spent $20 a month to pay for ChatGPT? That's $312 billion a year. And again, that doesn't count corporate spending or so on and so forth.
Right.
But it also doesn't count Amazon, Gemini, Claude, Perplexity, and people using other things as well, right? $312 billion would be if every single person in the developed world was had a monthly subscription for 20, and they're talking about a $1 trillion valuation for OpenAI, right? Normally, companies trade at like 6 times sales in the software space. So it seems, pretty frothy if every single person in the whole wide world is going to spend that much money. Again, it's a very simplistic view, but it shows how many things have to go right for these things to get to the levels that the market is expecting that they do.
And again, it's not just obviously OpenAI, right? To your point, it's OpenAI and it's the four names that I just mentioned, and who knows, how many others that are out there. And so back to my point as we started this segment, which is, why was this market so doggone rightfully concerned about this free cash flow versus CapEx spending this week? And then all of a sudden, the clock turns midnight and it's now February the 6th, and everyone goes, hey, not a problem at all. We don't need to be concerned about that. Doesn't make sense to me. Doesn't make sense to me. I'll take it. I love it. Lord knows I love it. But boy, oh boy, it made us kind of raise an eyebrow and go, what was this rally really about today? So fun stuff to talk about. We have a lot of it, to say the least. Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the John Sanchez Show on News Talk 780 KOH with Jason Gaunt. All right, once again, it was an incredible day. We're trying to digest it, parse it, make sense out of it. 107-point gain on the Dow, 2.47% to a record close of 50,115. NASDAQ surging 491 points, 2.18%. S&P up 131 points, 1.97%, and a 3.6% gain on the Russell 2000. Incredible day. Again, trying to break down the reasons behind it, because it's bizarre when you get a day like today where it was just everything. And like we were saying at the beginning, Jason, they were buying everything. I mean, I'm looking at all my different quote screens, and again, like I said, you had Amazon down. I mean, Reddit was down after being up early this morning. I mean, there was literally hardly anything. You had almost all sectors. Matter of fact, I think all sectors finished. You showing all sectors finished positive? I have a different look on my sectors than you do, but I'm showing all sectors positive. You showing the same thing?
I completely agree. Yes.
Yeah,
I do.
So again, complete broad-based rally. Let's hit the commodities real quick. 32-cent rise in oil to $63.56 a barrel. Gold up $82.90. So this was once again kind of the bizarre thing, seeing gold surging when the equity market is surging. 39.61 was our closing level on gold, and the bond market didn't even pay attention. I think all the bond traders are on long vacations, Jason. I don't think they've come back from the end of Christmas. Unchanged on the 10-year at a yield of 4.21, down a whopping 3 basis points for the week. Just not moving whatsoever.
I mean, the
All
dollar
right,
was
before
down
we,
a touch today, but nothing crazy that
yeah,
would.
nothing. Yeah. I want to give all of you, including Jason, a little perspective. I mean, he knows this, but he's never heard this story because I just went back in time a little bit. Again, as I said, we closed at 50,115. First time the Dow's ever closed above 50,000. We've hit it a few times intraday, but never closed there. So Jason and I went back 1998, right around September. I was able to go to the floor of the New York Stock Exchange, walk around and see the closing bell and look at all the papers on the floor and on and on and on. And at that point, you've heard me say this portion of the story. They were handing out hats of Dow 10,000.
Yep, we had one on our trading desk. I remember that.
Yep, there you go. So September 1998 is when the Dow Jones Industrial Average broke 10,000. Here we are today, 50,115. Isn't you stop and think about that? My gosh, what a monumental accomplishment. Just absolutely monumental. It's
it just shows the compounding growth over time of U.S. entities. It's pretty impressive.
Yes. Yeah. And I think, honestly, if AI can hold and we're going to go through ups and downs as we've always predicted, as fast as this market is growing when it does grow and the economy is growing when it does grow, Dow 100,000 be in the cards. I think it could maybe in the next 10 years. I don't think it's going to take, nearly as long. 27 years it took to hit 50,000 from that 10,000. So I bet you could do it in half that time.
Sure. I mean, they'll just pull out some stocks and put in new ones and do whatever they need to do in the Dow to keep those numbers going
37 years, excuse me, 37 years to do that. Yeah. Yeah, right. Yeah, exactly. That's it. That's exactly right. Yeah. Pull out the bad ones, add the good ones. Just before we know the Dow will be all tech related. And boom, there you go. All right. So let's go to some of the big movers today. We'll start with Super Micro, SMCI. This is just a wild ride. They're kind of a stable coin custodian, I guess is the best way to describe them. Been under significant pressure, rebounded today, of course, with that rise in crypto, 11.44% gain, up $3.53. NVIDIA was up $13.53, 7.87%, 185.41. That's the first day you and I have been together on the show, so we didn't get a chance to chat with you about this one. Did you not feel, at least this was my impression, did you not feel that Jensen Huang, the CEO of NVIDIA, was basically out begging the street to believe him that they were still going to invest? He never committed to the $100 billion that started the week, right? They started the week, and analysts and critics were coming out and saying, the rumor on the street is that NVIDIA is not going to invest the $100 billion into OpenAI like they said. He came out immediately, said, we love OpenAI. And a couple of days later, they said, we're still investing. I think it was, 70 or 80 billion. Never would say, oh, we're going to do the full 100. So they kind of lift that up in the air. But I really sensed, if you watched any of his interviews, that he was almost begging the street to believe him that everything is fine between NVIDIA and OpenAI, and of course, NVIDIA and everybody else that they do business with.
And I think that's the second part of your statement, I think, is the part that may be what caused some of it this week of, they need to diversify their love, right? They can't just buddy with them. I found it sort of in line with the XAI merging with SpaceX, and you've got, all the stuff that Claude was saying at, Anthropic. Again, if anyone gets a chance reading Dario's note from Anthropic about where he sees AI going, it is a must read. Just go look up The Adolescence of AI, I believe it's called. It's incredible. It's long. It's like 20.
It's taken over.
Well, I mean, I think he just points out the what could happens, not in like a nefarious end of the world way, but just the things that if you're a regulator or a, investor or a biotech person or a computer scientist or all these things you should be thinking about that aren't necessarily a negative, but the negatives of how easy it could be to make a nuclear weapon, but the positives of biotech and all these gene therapies and drugs that can be cured, right? The negatives of white collar jobs changing and such, and the positives of efficiency. So it's very non-biased, but it's an incredible. It gets you thinking. Even if half of it's true, there's monumental changes coming. We talked about 50,000 geniuses all in one place, right? Theoretically at a data center, right? Where the machines themselves are so smart and have been trained so well that they could react so much faster than any human 50,000 people possibly could. And there's pros and cons to that. He was very negative on NVIDIA offering chips to China. He said it's like basically stupid. You know, why would you do that?
Really is.
And that was a question that was asked of Jensen Huang today. So it's a really good read. I highly.
And what was his response? What's his latest response?
He pushes back. He
times.
says that, you know, if you're US and you want to be a global player, that, you know, China's very smart and, you know, I don't think you should be giving it to the military, but I think you should be giving it to Chinese companies because of all the reasons that a CEO would say.
And of course, I'm sure, because I didn't see the interview, I'm assuming he didn't say anything, of course, about getting pressure from the Trump administration to sell those H200 chips to China, because the Trump administration, i.e. the government, makes, what was it, 10%, 20% of the revenue? Nothing like that was brought up, right?
No, nothing was brought up about that.
You think about it. Yeah, shocking. Because you think about this, that's really, Trump is really the catalyst behind these Chinese sales, right? Remember, Biden administration, like, no way in heck you're going to, I mean, they allowed a little bit, but nothing like what Trump wanted. Then Trump comes in and says, hey, this is a way for the government to make money. So, hey, Jensen, go ahead. You can sell your chips to the most dangerous country in the world. And they, up again, down again, whether it was going to happen, and finally happened. And yeah, those chips, and then they say, oh, but these are kind of the older, outdated version, right? It's like you're buying a 2020 car instead of a 2026 car. I don't believe that for a second, but yeah, as you can tell, that's a very sore subject with me. I think that is the biggest mistake as a country and, frankly, as a CEO that you could make. I mean,
I would agree.
I know he's
we're
got
already
some
way
type
ahead, or we're ahead. Why?
We're ahead. Yeah, exactly. So why give it to him? Are you doing
it
it for the money? Are you doing it for the revenue? I don't think you need it, right? My God, the hundreds of billions of dollars that NVIDIA makes, do you really need to go give it to, again, the biggest competitor in the entire world? I mean, why didn't they just go give some to Russia too? Man,
and they don't respect IP. They'll go in and rip off all your stuff too. Like they've proven over and over and over again.
They've always done it over and over again. Yeah. Yeah, or maybe use that IP of the that they do that with, and the new NVIDIA chips to create our next virus, right? Another subject there. All right, we'll continue on. We're going to get into now. We'll shift gears a little bit because we're running out of time. We'll shift gears and come back and start talking about this market valuation. Again, this was if you listen to the show every day this week, or if you're not, or if you didn't, please pick up the podcast. We talked about market valuations. Every major tech company this week that reported talked about their CapEx spending. Never seen the street pay so much attention. Now you're going to understand why, because they are spending a lot of money to build out AI infrastructure. Let's turn it over to Jack Sabin. He's got news, traffic, and weather. Jack, welcome back to the John Sanchez Show on Newstalk 780 KOH with Jason Gaunt. Happy Friday to all of you. Hopefully you've had a chance to look at your portfolios for the day, because I have a feeling they're probably a little bit higher today than what they were yesterday for most of you. 7-point gain on the Dow to close at 50,115, above that 50,000 mark for the very first time. NASDAQ rose 491 points, 2.18%. S&P up 133, or 1.97%. Any other movers you wanted to mention? I thought what was interesting before you answer, you didn't see Google participate today. So some of the big names, Google is down $8.23, almost a 2.5% loss. Meta did not participate, down $8.75, 1.31%. So you had a few of the major, Mag 7s, we'll call it, that did not participate in today's rally. And I'm sure that kind of upset them.
Yeah, for sure. I mean, and they're the ones who are the spenders, right? The Metas, the Googles, the Amazons. And so they're to some extent penalizing them, because think of this other mechanic inside of the market: buybacks, right? Buybacks are a massive part of the reason that the market continues to go higher. I had a meeting with a client yesterday and I talked about dividend stocks. And I said, dividend stocks have gone the way of the dodo. People don't issue dividends like they used to before. They buy back stock because it's a much more tax efficient thing to do for your shareholders. Just reduce the float, make your shares worth more money. And if you hold it long enough, you can be selling the stock at the same tax rate as you would for a qualified dividend. So it's 6 and 1/2 dozen of the other, in my opinion, right? So if you've got Meta, Google, Apple, Amazon buying data centers instead of buying Apple, Meta, Google, Microsoft stock, you've got big buyers that aren't in the market anymore, right? And that's a real number of buyback, of consumption of the biggest constituents of the market. So that's part of where the freak out comes from at times too, is less money buying back the biggest stocks inside of the market. So it's something at least to be thinking about when people freak out about CapEx. So yes, it may or may not be true as far as the spend, or they may or may not be able to afford it, or they may or may not have free cash flow because they're spending all their cash flow on buying data centers and whatever the other stuff they're buying, but they're also not buying stocks. And that's what could be an issue longer term.
Yeah, I also want to remind everybody, rarely corporate America buy any real estate, right? What they do is they will hire a company, and then there's venture capital, private equity behind the construction company or the developer. Then a real estate company will come in, sometimes a real estate investment trust. There's all kinds of structures. And then bottom line, what they do is they turn around and they lease that data center back to the Metas and the Amazons, et cetera. Corporate America does not want to own real estate. There is no tax advantages. If they lease it, then it's a full tax deduction for them. So that's again, the other leg that Jason and I have discussed many times is, what's going to be the real life expectancy of a data center? Number one, what's the life expectancy of all the servers and the chips in there? We've had a number of shows on that. But also, what's the term of these leases? I bet probably if you look at these leases, Jason, I bet they're probably on average 7 to 10 years at the very most. And so what's going to happen to these big, giant concrete buildings that are, can't really do much with if they're not a server farm? What's going to happen there? So that's the other side of things there. Now, let's get down to this story, and I want to give full credit to CNBC. It was really a fascinating story. What are you looking at?
I'm looking over at Alphabet, Apple, and Meta's buyback amounts.
Look like you're looking out the window. It's like, Jason,
just my screen's over here.
Got a bird out there or something?
Yeah,
okay.
Yeah.
All right. So
it was like 200, almost 150 billion in stock in 2025. Apple, Alphabet, and Meta. In terms of
now,
buyback.
what about the 100?
Just last year, like 100 almost $160 billion between the three of them in
which
buybacks.
I wonder what's projected for this year.
I'll look.
Yeah.
Probably less.
All right, you do the. Yeah. Well, let's see. Yeah. All right. 150 is the bogey. All right. So let's go down to get into more details with you. Again, something that rocked the market this week, but miraculously today, nobody cared about it. So once again, as I said at the beginning of the show, you've got Alphabet, Microsoft, Meta, and Amazon. They are expected to spend nearly $700 billion combined this year for their AI build-outs. Now, as you're going to find out, we're not just talking the real estate side, right? Sure, they got to, I'm sure, front some money for development costs, et cetera. But really, this is about the actual buying the chips, buying the servers, what goes inside those four walls. So for investors who love cash above all else, there's some warning signs that may be flashing. With the heart of tech earnings season wrapping up this week, Wall Street has a clearer picture of how artificial intelligence race is posed to accelerate this year. These four hyperscalers are now projected to increase capital expenditure by more than 60% from the historic levels reached last year as they load up on high-priced chips, build new mammoth facilities, and buy networking technology to connect it all. Getting to those kind of numbers is going to require sacrifice in, as I was mentioned earlier, the form of free cash flow. Last year, these four biggest U.S. internet companies generated a combined $200 billion in free cash flow, down from $237 billion in 2024. Free cash flow is going the wrong way. Now, the more dramatic drop appears to be ahead as companies invest heavily upfront, promising future returns on investments. That means margin pressures, less cash generation in the near term, and the potential need to further tap the equity and debt markets. Alphabet held a $25 billion bond sale in November, and its long-term debt has quadrupled in 2025 to $46.5 billion. Let that absorb a little bit, folks. Just Google alone, $46.5 billion in debt. Amazon, which, as we all know, yesterday, said they expect to spend $200 billion this year. And they're now looking at a negative free cash flow. Now, folks, listen very close to what I'm about to tell you, because mark this on your calendar for when Amazon does reports earnings the next quarter, okay? Because this is an important metrics that analysts look at. So Amazon, again, expects to spend $200 billion this year. They're now looking at negative free cash flow of almost $17 billion in 2026. That's according to analysts at Morgan Stanley, while Bank of America analysts see a deficit of $28 billion. Oh, it's a few billion, Jason. In a filing with the SEC today, Amazon let investors know that it may seek to raise equity and debt as the build outs continue. Despite beating on revenue for the quarter, Amazon saw its stock sink 6% today, bringing its drop for the year to 9%. Microsoft is down 17% most in the group, while Alphabet and Meta are up slightly. While Amazon laid out the most aggressive spending plan among the mega caps, Alphabet wasn't far behind. The company, which is investing in its cloud infrastructure business as well as its Gemini models, sees up to $185 billion in CapEx spending this year. Morgan Stanley's managing director said on CNBC that he's projecting even more spend in coming years, with Alphabet shelling out up to $250 billion next year. Pivotal research projects Alphabet's free cash flow are to plummet almost 90% this year to $2 billion from Jason $73.3 billion last year. Let me repeat that one, folks. Pivotal research is projecting Alphabet's free cash flow to plummet almost 90% this year to $8.2 billion from $73.3 billion last year. Analysts at Mizuho wrote in a report that bearish investors may look at the potential doubling of CapEx this year as, quote, leaving limited FCF, I'm not sure what that is, in 2020. Free cash flow in 2026 with uncertain, quote, return on investments. Still, the analysts remain bullish and all kept their buy recommendation. Of course they did. They want the investment banking work. Kept their bullish rating on all the respective stocks. Longbow Asset Management, their CEO, is right there with them. He counts Amazon as the biggest holding in his portfolio, followed by Alphabet at fourth and Microsoft at fifth. Quote, if you're not going to pour all your money into AI, it's going to reduce your free cash flow. Do they have to go to the debt markets or short-term financing to find the optimal mix of equity and debt? Yeah, that's why CEOs and CFOs are paid what they're paid.
So they're living paycheck to paycheck.
Do we ever learn, Jason Gaunt? Do we ever learn? Is this like rewriting the history books all over again? Pour it all in. Some will survive.
The math.
Yep, the math is still math. Let's see. If I make $1 but I spend, 50 or $1.50, that's called negative cash flow, free cash flow. Oh my goodness. Let's wrap it up with Kristen Snow right now. Welcome back to the John Sanchez Show on Newstalk 780 KOH. Happy Friday. Happy Friday, Jason. Happy Friday. Oh, what a way to wrap up the week. What a way to wrap up the week. All right. Our incredible marketing director, Bailey Sanchez, wants to jump on the air with an interesting stat. Now, I don't know what this number is. She said it out. I've got some important stat for you. So fire away, my dear.
Wow.
There's many more. You got to go back to Thank
back
you.
When you had a stenographer.
Got to go back to 1990. So Bailey, average that out, whatever that number comes out, and then take that and go back to 1990 when I started radio, 1997, I guess. Yeah, when I did the first Saturday show.
Yeah.
Yes, we appreciate you all. Thank you. Yeah, and I have both of you. I just want to make this little side note from the market. So I don't think I've even had a chance to tell you, Jason. So I'm redesigning my home studio, and what you're going to see, I should hopefully, God willing, get it finished this weekend. You're going to see a big TV behind me, right? So the cameras will show on me. You're going to see because again, folks, we're making a big push for YouTube. You're going to see a big TV behind me because I got tired of Jason saying, if you guys could see the graph or the chart that I'm looking at, brother, you're going to now be able to just give it to Bailey. She'll show it to me, and then we'll put that graph up on the TV behind me.
Yeah, we can do that.
You'll be able to see the graph that Jason's talking about. We're talking about stock charts, educational things, so on and so forth. So that's just one of the many things this new studio is going to do. But yeah, it's I'm
like, can I just click this little tab here that says share, and I can show it in the?
You can do that, but it's not the same as being on a big screen TV.
We need to get John like a pointer and like a light.
Oh yeah,
and,
laser
screen.
Hey,
we're gonna come see John on the green screen.
Yeah, you don't know. You have no idea all the things I have planned for you too. But it's all for our audience, our dearly beloved audience, and our clients and things that listen to us. And we do thank you, as Bailey said. We thank you for that each and every day. That's why we do this every single day.
Make fun of us. It's fun.
Yeah,
comments.
Yeah. Please, absolutely.
Get one every once in a while.
The other thing I'm real excited about, in all honesty, one of our Jason and I's goals for 2026 is to be able to start pumping out a lot of educational. Many of you are asking for, hey, can you guys do a topic on this? Can Jason talk about this? And so on and so forth. Now with this new studio and then, like I said, the TV and things like that, it's going to make it a lot easier to be able to pump out a lot of these educational videos that we'll make available on the KOH website, our site, YouTube, Spotify, so on and so forth. I think it's gonna be a real turning point. I'm excited to get it finished. I started the project last week, and God bless Amazon. All I can say, because I sat down and I designed out how I wanted it, what new computers and screens and da 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 I wanted. And I told my wife, like, okay, we gotta hit a Reno and go do a bunch of shopping. I'm like, I just don't want to go spend 4 to 5 hours shopping. She goes, ding dong, go on Amazon. 30 minutes, had it all ordered, and it all arrived this week.
Nice.
That's why Amazon is what it is. And I can't tell you the amount of money it saved me, because I compared shop to a lot of things. Other than Costco. Costco was a hard one to beat on Amazon, but other than that, it was pretty good.
I'm excited. I'm excited.
Yeah, exactly. All right. Last thing that we want to talk about in regards to capital expenditure. This is really critical. And that is Meta. Barclays analysts are saying that Meta's free cash flow is going to drop 90%. After the company last week said that their CapEx is going to reach 135 billion. So the bottom line, let's summarize this for everybody, and that is this. This is something we are going to need to watch very closely. As I said yesterday, Jason, or I've said throughout the week, I've never seen a time period where analysts have paid so much of attention, or you're hearing so much about CapEx spending. I think because obviously the numbers are so big. So I think this is a metric that we all need to watch very closely going forward in the next earnings season.
I completely agree. It's going to be a fun one. At least we get to wait for it for a while.
Yeah, thank goodness. Yeah, give us a chance to digest this one. That's for sure.
Yes.
All right, everybody. Well, God bless you again. Thank you for joining us. And Bailey, thank you for those great stats. It couldn't be possible without our wonderful audience and our incredible clients. We appreciate all of you so very much. And we will be back with you on Monday on the John Sanchez Show. Have a great weekend. See you, Jay.
John Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.